Have you been wishing for a big unicorn for the holidays and you came away empty-handed last week? Today we'll take a look to see if e-commerce platform Wish could be that bargain unicorn IPO you're looking for. And I have a couple of other big news items to report on. One is a very popular company with a lockup expiration coming up, and the other is breaking news on Roblox in their pursuit to go public. This is one episode of IPO This Week you won't want to miss. Welcome to IPO This Week for the week of December 14th, 2020. Today, as we do every week, we'll take a look at the IPOs for the coming week. As we head into the middle of December, confirmed IPOs have slowed. In fact, as of this recording over the weekend, I only have 4 that I'm confident of launching this week, although I could see some added to the calendar for later in the week, and if that happens, I'll give you guys an update. For today, I'll give you overviews on the 3 smaller companies going public, one that I think could be flying under the radar, and one that really isn't an IPO. I'll explain why that is when we get to that one. We'll also take a more in-depth look at Wish, which was one of the 5 big unicorns we were expecting to IPO before the end of the year. Last week, as you know, the first 2 came out, with those being Airbnb and DoorDash, and both of those traded much higher, insanely higher than their IPO price. We'll see if Wish will follow suit, and I'll give some of my own thoughts on what might happen. And then another one of those 5 unicorns was Roblox. And the big news that hit at the end of the week is that they are delaying their IPO until early next year. I'll share the reasons why that decision was made. And as always, I'll talk about lockup expiration dates, and we have a big one this week. I won't make you wait and tell you up front it's Snowflake. I'll give you the details later. This is one episode I would recommend you not clicking away from. But before we get into all that, I just want to thank everyone who was able to join the live stream last week. I can't tell you how much I enjoy the interaction. Although it's a little nerve-wracking for me because you never know what to expect. I'm looking at doing some more in the future, and we'll try moving the times around because I know we have people all over the world watching the channel, and I'd like to have everyone to have an opportunity to join one. And one other thing you may have noticed, our community hit 10,000 subscribers last week. I can't even begin to tell you how amazed I am at how fast the channel has grown, and it's done that because of all of you. I just want to thank you guys so much for all of your support, the comments, pushing the like button, and of course, subscribing to the channel and going along with me for the ride. I have some plans to further grow the channel as we head into the new year. I'll be sharing those in the weeks to come. But for now, let's get into the slate of companies coming out this week. I'll start with overviews of the 3 smaller companies before we get to Wish. The first one is an oncology biotech named BioAtla, ticker BCAB. This biotech is developing a class of therapeutic candidates to exploit characteristic pH differences between the tumor microenvironment and healthy tissue. According to the company, unlike healthy tissue, the tumor microenvironment is acidic, and they have designed antibodies to selectively bind to their targets on tumor cells under acidic pH conditions, but not on targets in normal tissues. Their approach is to identify the necessary targeting and potency required for cancer cell destruction, while aiming to eliminate or greatly reduce on-target off-tumor toxicity, one of the fundamental challenges of existing cancer therapies. At this point, they have 2 candidates currently in phase 2 trials for multiple cancer indications, with interim data expected in 2021. We've talked about biotechs a lot on the channel, and again, it's important to remember that it could take years for these candidates to make it to the market. And that's only if they are proven to be successful, which of course there isn't a guarantee, so you're definitely looking to the future. But if you are interested, the company looks to price on Tuesday between $15 and $17, and that should start trading on Wednesday. Next up, we have a lending platform company named Upstart, ticker symbol UPST. This company could easily gather a lot of interest from investors due to its focus on using artificial intelligence technologies to better predict credit risk by using a cloud-based artificial intelligence lending platform. Upstart could end up being the best of the bunch coming out this week from an investing perspective. According to Upstart, consumers on the platform benefit from higher approval rates, lower interest rates, and a highly automated, efficient all-digital experience. And then their bank partners benefit from having access to new customers, lower fraud and loss rates, and increased automation through the lending process. Since their inception in 2012, Upstart bank partners have originated over 620,000 personal loans that have generated more than 9 million repayment events. In the 9 months ended September 30th, 2020, approximately 70% of Upstart-powered loans were entirely automated. Their revenue is primarily comprised of fees paid by banks. Some of those fees include referral fees for each loan referred through Upstart.com and originated by the bank partner, platform fees for each loan originated regardless of its source, and then loan servicing fees as consumers repay their loans. As far as growth, the number of loans facilitated increased by 88% from 2018 to 2019 and 30% from the 9 months ended September 30th, 2019 to the same period in 2020. Revenue for the 9 months ended September 30th grew 44% from 2019 to 2020 to a total of $146.7 million. Also, for the 9 months ended September 30th, 2019 and 2020, they improved from a net loss of $6.5 million to a net income of $5 million. While the growth has been strong, one thing to keep in mind as a reason for caution is that one community bank in New Jersey named Cross River Bank originated 89% of the loans facilitated on the platform for fiscal year 2019 and 72% of all the loans in the first 9 months of this year, and much of the remaining loans came from one other partner. They definitely need to diversify the number of partners going forward. As for the IPO itself, they look to price on Tuesday within a range of $20 to $22. Public trading would then begin on Wednesday the 16th. Next up is Midwest Holding. Up front, this really is not an IPO, but a company that is stepping up from being available over the counter to being listed in the NASDAQ. I've included them because, number one, it's a light week, and number two, because a lot of people use brokerages that don't have access to over-the-counter stocks. Because it's not a true IPO, I'm not going to talk too much about them, but I will tell you that the company underwrites and markets life insurance products in the US if this is an area you're interested in. Basically, they utilize their technology platform to develop and distribute what they believe to be competitive insurance products through third-party independent marketing organizations. If this is a company you're interested in, and because they are already available publicly, you can search their ticker MDWT and easily find more information on them. Again, not a company we would normally talk about here, but I added just to give us another company to talk about in a light week. They look to start trading after being listed on NASDAQ on Thursday within a range of $70 to $74. Before we get to Wish, let's talk about the breaking news on Roblox. This was one of those 5 big unicorns that we talked about having an IPO before the end of the year. Well, as I always say, IPO dates are fluid, and this is a prime example of that. We just learned that the company has decided to delay their IPO until early next year. The reason? Well, Airbnb and DoorDash. If you're wondering what those companies would have to do with Roblox, well, it's less about those companies and more with IPO pricing relative to how it traded. As we all saw last week, both companies priced at one number and then opened up trading at a much higher number. Looking at Airbnb specifically, they priced at $68, but trading opened up at more than double that price at $146. From one point of view, the IPO looks wildly successful. It shows demand was strong, and if you're an institutional investor that bought shares at $68, you're really happy at that performance. However, if you're Airbnb itself, you're not so happy. Why? Because as we've talked about before on this channel, when an IPO trades higher than it's priced, the company can feel like money was left on the table because they sold the shares at $68 and that's all they get. They aren't getting that $146 per share, that's only where it's trading. If Airbnb thought that the stock would trade at those levels, they then could have priced their shares at say double of that $68, which would be $136, and they would have had raised double the money and the stock would have still been seen as successful to the general investing public because it traded over that price. Now it's not that simple because the institutional investors may not have bought the shares at that price of $136, so it's a delicate balance of the company, in this case Airbnb, working with their underwriters to get the best price they can get, but at a price that institutional investors will still pay. Based on what we saw last week, the demand of the IPO for both of those companies could have and should have netted more for Airbnb and DoorDash themselves. Again, it's not as simple as it sounds because institutions may not think Airbnb is worth what people are trading the shares for, so they may not have bought all of the shares if they were priced at $136. But there definitely was an opportunity for Airbnb to have made more money. And that's what Roblox is looking at, and it's the reason for the delay. At this point, they're having difficulty in determining a price for their IPO shares that ensures they get maximal return on their shares, while also ensuring demand is strong. Needless to say, Roblox was probably looking to come out this week before the holidays, but couldn't fit it in with being unsure of how to price its shares with the holidays looming to end out the year. So right now, all indications are that this is only a slight delay, meaning nothing has changed structurally for the company that would put the IPO itself in jeopardy. I know there's a lot of interest from many of you in the community. It probably feels like ordering a gift for Christmas that doesn't arrive on time. You know it's still coming, but it's a little disappointing. As I have more clarity on when the IPO will happen, I'll keep everyone posted. Okay, now to the big one actually coming out this week, Wish. For those of you not familiar with the company, it's a global e-commerce platform based in California and filed under the parent company's name ContextLogic. The company was founded in 2010 to focus on a platform of China-based merchants, and while they have expanded that reach to more countries, most of their merchants are still based in China. The platform connects more than 100 million monthly active users in over 100 countries to over 500,000 merchants offering approximately 150 million items. Many of their items include unbranded merchandise at bargain prices. So right now, I'm sure many of you are thinking of Alibaba as a competitor, and you would be right on with that assumption. Some other companies Wish sees as competitors include Amazon and Shopify. And they also consider discount retailers like Walmart and Target as part of their competition as well. One of the things that sets Wish apart from many of their competitors is that their platform was built for mobile users, meaning they didn't have to adapt an existing PC platform for a mobile experience, unlike a lot of other companies had to do. And that focus has been demonstrated in the data in that around 80% of its sales come from mobile devices. Based on a market research report Wish cited in their filing, global e-commerce was a $3.4 trillion market in 2019 and is expected to nearly double to that and reach $6.3 trillion by 2024. And within e-commerce, mobile, which is where Wish's focus is, consisted of 63% of global e-commerce in 2019, a number that is expected to grow to 71% by 2024. So how are they doing right now? As far as revenue, the company gives us a longer time frame of looking back than most do with their IPO filings. As you can see, going back to 2015, revenue has grown at a pretty good rate and pretty consistent. In fact, more recently, from 2017 to 2019, revenue had a compounded annual growth rate of 31%. And as you can expect, with the type of business they run, they thrived in the pandemic environment with revenue rising 32% year over year when looking at the first 9 months of 2020. As far as net income or loss, you can see that they've not been profitable for any year reported, but they also have not had any full years of being profitable going back to their inception. As far as some key metrics to look at, we have monthly active users as well as the data for active buyers in the last 12 months, which you can see on the screen. Excluding some blips, overall numbers have grown positively from year to year in both metrics. As to the IPO itself, it looks to be priced on Tuesday within a range of $22 to $24. The stock will then start to trade under the ticker WISH on Wednesday the 16th. After the craziness of last week, the question here is, where do we think this one will trade? Even with the demand in IPOs, I'm going to go a little on the limb here and say I don't expect this company to trade anywhere near as hot as Airbnb and DoorDash did. The company's rate of growth did slow a little bit in 2019, is pretty unprofitable, and has more competition from bigger name companies. Plus, I just don't see the general brand awareness and interest from the retail investors that both Airbnb and DoorDash has. As you know, I make no claims to predicting the future, and I'm just stating my thoughts here, and I'm not making any recommendations either way. I'm not saying it's a bad company to invest in, I just simply don't see it having the demand that last week's companies had. And if you like Wish, that may be a good thing, because then you might get that stock at a price that makes more sense, whereas you might have got shut out with DoorDash and Airbnb. But we'll see. What do you think about Wish? Let me know in the comments. Moving on, as we always do, let's talk a little bit about companies with locked up shares expiring. This week we have quite a few. First we have Royalty Pharma on the 13th, then we have JFrog and Snowflake on Tuesday the 15th. You might be thinking that both companies are still within the typical 100 days that lockups are usually set for, but both companies had guidance in their filings for earlier expirations with about 25% of locked up shares becoming tradable. Because this is only a percentage of all of the locked up shares, there may not be as much as a move of the stock as if all were being released at the same time, but it's something we'll keep an eye on, as there could be some downside pressure on the share price, and if you're looking for a better entry, this might be an opportunity. We'll have to see how it shakes out, particularly since both Snowflake and JFrog are down from their all-time highs already. Moving on with other companies with locked up shares expiring, for Wednesday we have Forma Therapeutics, Genetron Holdings, Newsies, and Repair Therapeutics. And then on Thursday, Progenity finishes up this week's list. We also have a couple of notable quiet periods ending, one for NeoGames on Monday, and then Maravai Life Sciences on Tuesday. Once again, there you have it. Another episode of IPO This Week in the books. And I think it was a pretty interesting one, even though there were only a few new companies coming out this week to cover. If you enjoyed the video and want to see more videos like this, please like it, comment on it, and share with your friends and on any of your social media sites. And if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free. You just got to press that little red subscribe button. And with that, I wish you a good week of trading. Thank you for watching, and until next time, have a great day.